afternoon, guys. You can see the market has closed. Time is around 3:47. Let's look at today's Nifty 50 as well as Bank Nifty trade analysis. You can see today the market gap down, clearly indicating bearish sentiment. And what we expected is that the market would reverse and continue further selling towards the downside. But you can see what happened is the market clearly broke pivot levels as well. But what we need to see here is that as we have plotted the 1 minute fib of the first candle as well as 5 minute zone, you can see market clearly broke this high, breaking the structure towards the upside and retraced back, took support from pivot levels and continued further bullish momentum. And if you try to plot the fib levels, the common point between this to the common point between this to the common point between this, you can see 100% level. The market came all the way to the 100% level of this retracement and continued further selling towards the downside. But in case if the market sentiment would have been bearish, the market could have easily broken this low as well, or even this low. But you can see clearly how the market was not able to take even this low, forming a breakout structure towards the downside. And before that itself, the market formed another bullish candle. Or in case if you see if the market retraces the fib of this candle, if you plot the high to low of this candle, you can see this is a fib of that candle. So there might be chances that the market might face some sort of rejection here, continue further selling towards the downside. But you can see again after this candle also, the market again tried to rally and clearly broke this high as well, clearly changing the market sentiment from bearish to bullish. This is breakout structure as well. So guys, whenever the market gap turns and and market is trying to head high, there might be high chance the market might face rejection from 9 as well as 20 moving average, or in case if the 200 moving average is trading around this zone, there might be some sort of rejection, continue further selling towards the downside. But here it formed a bearish engulfing pattern. A lot of sellers might have entered seeing this bearish engulfing pattern, clearly showing market sentiment to be bearish. But you can see after this bearish candle, the market was not able to take this low or even form a breakout structure also. And price taking support from these VWAP levels, clearly indicating some sort of bullishness. So it's not right on our side to take trades without proper confirmation, guys. Whenever you take such trades, you need a proper confirmation of breakout structure with fair value gaps or bearish engulfing pattern, keeping your stop loss just above that zone. But here you can see the market retraced all the way to 50 level and continued further selling towards this candle as well. But here the momentum didn't even sustain and was trading above the 5 minute zone as well as the mid of the first candle, as well as the VWAP level, clearly indicating some kind of support here. And you can see market clearly went and broke this high as well, forming a breakout structure. I hope you are getting what I'm saying, guys. And if you try to plot the few levels, the common point between this to the common point between this, you can see the price didn't even take support from this zone also. But you can see the market here broke structure also. This is the breakout structure towards the upside. And you can put the last down candle before the up. You can consider this candle as well, also as 1 minute order block. So the market came here, took again support from this 21 moving average. And if you try to plot the anchor VWAP levels here, you can see the last down candle, the price striking support. This is the anchor VWAP level. So you could have entered somewhere long position, or after seeing this bullish candle, you could have entered long position, clearly indicating bullishness. So after this candle, if you might have entered long position, you could have clearly sustained a decent amount of profit. And you can see how the market here broke this 200 moving average towards the upside. And you could have entered long position just here, guys, in keeping your stop loss just below this candle itself. And in case if you want to target, you can put the fib extinction levels, the common point between this to the common point between this to the common point between this. You could have targeted the 1.68 level. This is your first target you could have targeted. And the second target you could have targeted is the, look at this, guys, how the market came all the way to 2.68 level and exited your positions. And in case after this retracement, you can see there wasn't not impulsive momentum towards the downside. You can see some kind of trendline liquidity. If you consider this movement as some sort of trendline liquidity with no significant bearishness. And if you try to plot the fib extinction level, fib levels from here, the common point between this to this, you can see price still trading below the 0.38 level. So you could have tried your stop loss still here. So in case if you find this order block level here, as price might take support, but here the market didn't even take this support and continue further bullish momentum, clearly signifying a lot of bullishness. So you could have targeted all the way to 2.68 level, guys. In case if the market would have closed below this zone or the 0.38 level, you could have exited your long positions. But you can see the market sustained, and here it formed a bullish engulfing pattern over here. So in case if you find this kind of pattern, you could have again kept your stop loss just below this candle and targeted to higher. You could have added to your position as well. This is how you make decent amount of profit. And look at this, guys. This is about the first trade which we usually take. And you can see this kind of trendline liquidity over here, guys. This indicates bearishness because whenever the market consolidates in this kind of pattern, that indicates bullishness. But this kind of pattern, whenever after this momentum consolidation like this and further momentum towards the upside. But you can see here the consolidation was not right, and you can see the last sell-off candle here, clearly showing a clear sign of the last sell-off candle. After that, piercing pattern formed, and clearly the market broke this low, forming chalk over here. And after this chalk formation, you could have drawn the fib levels, the common point between this, the high between this to the low between this, because here it's blue candle, here also it's blue candle. So you could have drawn the fib 50 level here. So in case if the market retraced till this 50 level, or you could have entered your short position here itself, keeping a stop loss just above this candle or somewhere between this. And if you try to plot the fib extinction levels, the common point between this to the common point between this to the common point between this, you could have targeted all the way to 2.68 level here, guys. But here you can see the order block here. This is where I exited my position after this momentum. This momentum I didn't capture. I took this trade all the way from here to all the way here, guys. This is how I targeted. But this was quite unexpected, guys, because the price was trading below the 9 as well as 21 moving average. You could have holded on to your trade in case if the market shows some kind of bullish momentum, you could have exited. But here you can see the market, even after forming this blue candle, the price didn't rally and clearly broke towards the downside. So you could have exited at the 2.68 level, or you could have kept your VWAP level as target or 200 moving average as target. Let's keep 200 moving average, and you could have targeted 2.68 level. You could have here you targeted 2.68 level, and towards the downside also you're targeting 2.68 level, guys. Look at this, how the market has behaved. You're getting what I'm saying, guys. The market after this final sell-off candle broke towards the downside with fair value gaps and forming chalk as well. And the market again retraced back, took rejection from this zone, and the market again head towards the downside. You can see this candle, guys, broke both 9 as well as 21 moving average towards the downside. And you can see after this, the market showed some kind of bullish candle over here, showing some kind of bullishness. But here you can see the price rejected from 9 as well as 21 moving average, guys. You can see here the price rejection from 9 as well as 21. This candle is the perfect candle where you could have entered short position, keeping your stop loss just above that candle itself. And you can see how the market rallied all the way till here, guys. You could have traded till the pivot levels as well. And this was one trade setup which followed a good price action. And here you can see price taking multiple supports here. The day VWAP level, as well as this is the day VWAP level, and this is the 200 moving average where the price is taking support over here. And you can see the market clearly broke this high with fair value gaps towards the upside. So you can consider this as break of structure, or in case you could consider it to be a chalk as well. And so you could spot drawn the large down candle, and this is the large down candle before the up move. Order blocks are valid only for once, guys. So this is the 1 minute order block. So once this order block has been mitigated, so after this the order block doesn't hold any value. So you can see price here rallied up with fair value gaps, and the price consolidated, and you can see some kind of trendline liquidity over here, guys. You can see here this kind of consolidation indicating bearishness, and you can see market clearly came here but took support here and formed a bullish engulfing pattern, and you could have entered long position targeting this high. This is one beautiful scalp you could have taken, entering long position, keeping your stop loss just above this candle and targeting this to swing low. And you can see again the market retraced, took support from this 200 moving average as the price again took support here. So in case if you want to draw the fib extinction levels, the common point between this fib extinction levels as this formed another order block as well. So the common point between this to the common point between this to the common point between this, you could have targeted all the way to 1.68 level, guys. You can see how the market rejected price from 1.68 level, or you could have targeted to 100% move as well. This is how the market usually behaves. So looking at this kind of support, guys, where the market tried to head higher, you can see this 200 moving average has been respected. I hope through a lot of practice only you can get this kind of trade, guys. You could have easily entered after seeing this kind of bullish momentum, keeping your stop loss just above that candle itself, below that candle, and targeting all the way to 100% or 1.68 level. This is how you trade, guys. Whenever you see after this bearish candle, the price couldn't even break towards the downside, clearly indicating some kind of support here. You can see this kind after this huge impulsive candles towards the downside, and you can see another huge impulsive candle towards the downside, following another candle showing some kind of bullish engulfing, clearly showing some kind of demand over here, guys, where buyers are entering the market. So it's clearly significant that the market here is sort of strong, and you could have entered long position here. And you can see here, this looks like a final sell-off candle after this kind of consolidation. You can see this is another kind of consolidation. So in case after this break of structure, you could have plotted this low over here. Once the market breaks this low, you could have entered short, because as I have told you that after this final sell-off candle, the market faces rejection, and you can consider this zone also, where the market here, where supply over here, there was a lot of supply, and if you consider the order block over here with fair value gap, you can consider the last up candle, and this is order block, guys. You can see how the market clearly faced rejection. You can consider the above candle, but this is the last up move which broke structure towards the downside. You can consider this order block, and you can see how the market came all the way to that 1 minute order block, faced rejection, and continued. In case if the market sentiment would have been bullish, the market after breaking down again could consolidate. Like after this breakout, market would have sort of consolidated like this and continued further upside. But here you can see once if this low is being broken, after seeing this impulsive candle breaking, single candle breaking both 9 as well as 21 moving average, you could have entered short position just here itself, guys, keeping your stop loss just above that candle and targeting swing lows, as these order blocks are all being mitigated. And this kind of consolidation you can see here. This looks like a channel showing some kind of weakness, and you could have targeted all the way to this low, guys. This swing low you could have targeted, and you can see how the market KZC came all the way to this swing low and took support over here. This is how you could have entered short position. And you can see there's some sort of bullish momentum here, but price couldn't cross the 21 moving average as well as 9 moving average, and clearly market head towards the downside. And here the market formed some kind of order block also. This is the last up candle before the down move. So this order block has not been yet mitigated. So let's keep it aside. And the market came all the way here. So you can see this was another good trade setup where you could have taken. And after this, you can see the market tried to rally up again, consolidated here. So this momentum though is quite not following a good price action, guys. But what we can expect is that the market didn't even break this high also to expect a chalk formation. But here you can see this low to this high, which actually broke. So you can consider this, but what we need to confirm is that the market after reaching this 100 moving average, guys, faced rejection over here and broke this low, guys, clearly indicating chalk formation with the fair value gaps. This is the chalk formation. You can see here there isn't much proper demand, but you can expect there is some sort of demand over here where price came and tried to head higher. And you can expect this order block also. This is the 1 minute order block where here the price over here, uh, the last up move before the down move, which broke this low with fair value gap. You can see the market came all the way here, couldn't mitigate this order block, again rally towards this zone. This is the demand zone over here. So price took support here, again went all the way to 1 minute order block. Here the price faced rejection from this 200 moving average. As you can see here, the market faced rejection from 200 moving average, but here you can see how this 200 moving average acted as support here, but here it acted as resistance. So you could have just after this order block, you could have entered short position here, keeping your stop loss just above that candle or above this 1 minute order block. And if you try to plot the fib extinction levels, the high between here to the low here to the high over there, you could have targeted the 1.68 level, or you could have targeted, look at this, guys, how the market came all the way to 2.68 level and exited. You could have just tried your stop losses. This is the 100% move 1.68 level. You could have exited here, or you could have targeted all the way to 2.68 level. And this is where you could have made another decent amount of profit, which followed a very good price action. And after this, here you can see clearly the market here broke structure towards the upside, indicating chalk formation here with fair value gaps over here. And you can see the last down candle here. You can see the order block where it broke towards the upside. And if you try to plot the anchor VWAP level here, guys, you can see price consolidating. And if you see the last down candle to the up candle, you can see price taking support at 550 level here. This is a 550, and price trying to take support over here. So you can see here anchor wave up level support, 550 level, chalk formation, and after this bearish candle also price consolidating, clearly indicating some sort of bullishness. And if you try to plot the fib extinction levels, the common point between this to the common point between this to the common point between this, you could have targeted all the way to 1.68 level. Look how the market came uh, all the way to 1.68 level, guys. This is the 1.68 level, or you could have targeted this order block. So this order block has been mitigated. So you could have considered the last up candle. So you could have considered this order block. So the price came all the way, or you could have exited at this candle itself about when the price reached 1.68 level. You can see after this the market formed an engulfing pattern here and came down. So this was one another beautiful trade setup where you could have taken keeping your stop loss just above below that candle and targeting all the way to here, guys. And you can see, guys, how today the market behaved with one, two, three, four, five, six, seven trade setups, which followed a clear price action here. I hope you are understanding what I'm saying, guys, because you can see clearly here that the market showed clear price action, and you can see targets also, guys, clear pink targets 1.68 level, 2.68 level, the 2.68 level, pin candle targets, guys, and supports also. This is how usually the market behaves, guys. And this is about Nifty 50. So in Nifty 50 today, the price action was well followed compared to Bank Nifty. So usually Bank Nifty follows good price action. But you can see today the market gapped down, and without any retracement, the market is trying to head higher. Only one rejection is this candle, this dodgy candle over here, guys. You can see after this candle, usually market used to continue towards the downside after facing some sort of rejection from this 200 moving average. But you can see here the market after this dodgy candle even broke towards the upside and 200 moving average and continued further buying itself, right? And this candle consolidation also, the market was trying to stay above this 9 21 moving average, clearly indicating very bullishness. So anywhere in this momentum, you could have taken long position, but in Nifty 50, when it compared to Nifty 50 at around 943 is where you could have taken in Nifty also. So if you consider at around 943 when this high is being broken with this bullish solid bullish candle, you could have taken long position here, guys. So once if you are taken long position, you could have targeted all the way towards the upside. And here the market here with this first candle, the market clearly broke stock formation over here, but in Nifty 50. But here you can see the market formed double top with no chalk formation. But the market again, this came all the way, didn't reach all the way here, guys. But in Nifty 50, you can see in Nifty 50, you can see the market after this sell-off candle broke this towards the downside, formed a chalk over here, again retraced back to the 350 level. But in Bank Nifty, you can see the market here didn't form any sort of price action, just two supply zones over here, the double top, which clearly indicates bearishness only. But what we need to see here is that when this double top formation has happened, guys, here you can see RSI divergence. You can see how here the RSI divergence took place here. Here the formation of double tops here clearly indicating momentum loss. And here you can see price trying to take some kind of demand over here. So you could have consider RSI divergence over here whenever you see a double top. And and you can see how the price trading above the VWAP, day VWAP level as well as 200 moving average with no proper price action being followed, guys. But here you can see as here, same as in Nifty 50 where the market broke structure here. You can consider this to be a chalk as well or else a break of structure. And in case if you consider the last down candle, you could have considered this to be an order block. So if you try to plot the fib extension levels, uh, the common point between this to the common point between this to the common point between this, You could have targeted this swing high or the 100% move as well, or you could have targeted the 1.68 level. But here the market didn't come, but it came here, guys. It reached over here, but let's not see. You can see here, or after, if you try to plot the anchor wave level here, you could have seen price taking support. In case here also same way. So you could have entered short scalp position after this bullish candle, keeping your stop loss just above and targeting to this swing high. This is how you could have targeted, or the 100% move. And you could have tried your stop losses to 100%, or you could have exited after seeing this bearish candle forming, or anywhere here you could have exited. And the market kind of moved in a sideways, guys. Here you can see the market clearly showed some bearishness. After that, the market head higher with no proper chalk formation. But here you can see the market clearly formed a sort of chalk here, clearly breaking this low with fair value gaps. So you can consider the last up candle before the actual down move is this candle with fair value gaps. You can see this order block has not been mitigated and the market took support here and again went all the way here and faced rejection over here. But here, this kind of dodgy candle as well as the small rejections over here, clearly indicating some sort of bearishness. So, but here you can see market here followed a very good price action over here. This is the break of structure towards the downside with clear chalk formation, clear fair value gap. And if you try to plot the order block level here, you can consider this last up candle over here. So these order blocks are being valued for only once, guys. So you can see here the market again came, consolidated and took support from this zone over here, this sort of demand zone over here. Price actually taking support here, faced rejection. After this rejection, this in confluence to at around 12, 212 in confluence to Nifty 50. You can see here, guys, this price rejecting from this 200 moving average. The same here. You could have entered short position. So in case if you want to plot the fib levels here, the fib extinction levels, the common point between this to the common point between this to the common point between this. You can see here also the market came all the way to 2.68 level and you could have entered, exited this trade as well, keeping your target as 2.68 level. So short position here, 1 minute order block, keeping your stop loss just above that candle and targeting all the way to 2.68 level. And you can see the last up move, which actually broke even this low, clearly indicating breakout structure. But here you can see some sort of demand. And here the price pierced this candle and even broke structure towards the upside, changing the market sentiment from bearish to bullish. So here the market formed a chalk, guys. And if you consider trying to plot the fib levels here, the common point between this to the common point between this, you can see price trying to form some kind of support at 0.38 level. You can see this is a 0.38 level where price is forming some sort of support here. And in case if you want to think that the market might have retraced here, face some sort of rejection from this 50 level and continued further selling towards the downside, you should also be vigilant about that, guys. If you want to plot this high low to this low, you can see clearly the market with impulsive momentum as well as breaking this high with chalk and even closed above this 50 level here. And till 200 moving average also the price came, faced rejection again, came down, took support from this 9 as well as 21 moving average, continued further selling toward upside. But in case if you plot the anchor VWAP levels here, guys, you can see the price even trading below, trading above this anchor VWAP level. Or if you try to plot this anchor VWAP level, you can see above this high. Here the price is trying to take some sort of support over here, clearly indicating some sort of bullishness, guys. So if you try to plot the fib extinction levels, the common point between this to the common point between this to the common point between this, you could have targeted the 1.68 level as same as in Nifty 50. And this is the 1.68 level, guys. Or you could have targeted the first target around this zone as 100% target also. You could have either exited at around here also, or if you have patience to wait and if you know how price action behaves when price consolidates above the 9 as well as 21 moving average, clearly indicating some sort of bullishness. So you could have kept your stop loss just below this candle itself, guys, and targeting all the way to that upward momentum. You can see this anchor VWAP level will help you in confluence, guys, to take better trades. And for today, I would like to tell you another important thing, that is Heikin-Ashi. And you can see, guys, this Heikin-Ashi also will help you to take hold on to positions. So you can see here there is sort of bullish momentum, and you can see this two doji candles where price is trading above the 9 as well as 21 moving average. You could have just hold it on to your trade. And when the market is bullish, the wicks will be towards the upside, and if the market is bearish, the wicks will be towards the downside. You can see, and the closing price here, size the high, you can see there will be no wicks towards the upside, and this will indicate strong bullishness. This kind of momentum will indicate strong bullishness with no wicks towards the downside, and no wicks towards the upside indicates a strong sign of bearishness. And you can see it even today also, guys. You can see after this kind of bearish momentum towards the downside, the market with no wicks at all, just 1 week here, 1 week here, clearly showing momentum towards the upside. Even this also, the market took support and continued further. If you know how to use it, guys, you can better make use of even Heikanashi to just hold on to your trades. So you can see here there are a lot of bearish candles here. You might face some kind of fear whether you need to hold or to exit. You can see a lot of bearish candles, but in Heikanashi you could have only found one and two candles only, and all the way you could have just traded and tried your stop losses. And this is about Bank Nifty, guys, and this is about Nifty. So in Nifty 50 today, the price action was very good. So you could have made a decent profit. So I made a profit of around 9K. So this is about my trade, guys. I have taken long short position here, long position over here with very less capital, and I have taken short position, this long position here. And here I was not in this trade, guys, because I was out. But I could have missed a good amount of profit here. But it's okay, guys. Just for my sake of teaching, I'm teaching you because I feel like someone out there will be helpful with my trading knowledge. If you really find my videos helpful, please like, share, and comment, guys. And if you want to share anything over here, you can comment below. So I will read. Thank you, guys.